Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors, and welcome back to Real Estate Investing Abundance. I'm your host, Dr. Alan, and I am delighted to be with you again today as we take a look at a life of service from military to multifamily. With us today is Marcus Long, and he is an intentional husband, father, and the founder of a Long Legacy Capital. Following a 21-year career as a naval officer, he leveraged his nearly 2 decades of real estate investing experience to continue a life of service to educate and bring opportunity to others. And I just want to add that Marcus is on our senior advisory team. And so I am doubly delighted to have him with us today. So Marcus, take us into the show and share a memorable experience that helped you to be who you are today.
Yeah, thanks so much. I appreciate you having me and sharing the opportunity today. So, yeah, memorable experience. I think, one thing I've shared a few times, probably because it's been so impactful on my journey, is going back probably about 6 years ago, I guess, when my oldest child was about 3 or 4 at the time. And I was still in the military at the time. I was working, 12 hours a day or so. And I came home from work one day. I usually at work in the office before they were ever out of bed. Came home from work early one day, and she said, "Daddy, what are you doing here?" And I said, "Hey, I just came home to spend a little time with you guys this afternoon." And she kind of looked around and she said, "But it's still light outside." And it was kind of probably memorable, but not a good experience or memory necessarily. It was kind of a gut punch at the time. And it was kind of as I was approaching the time in my military career where, I had some decisions to make about pursuing promotion or, retiring and stuff. And in that moment, I kind of knew which track I needed to take, to make sure that I was present for my family. So that was pretty impactful in the few years after that and kind of leading to where I am today.
So it really was personal experiences that led you from the military and taking retirement when you were able to, and going into full-time real estate investing. So what were the lessons from the military that you have been able to translate to your real estate investing journey?
Yeah, I think a couple of lessons, there's probably certainly a lot of them, but a couple that come to my mind pretty quick when we think about this is in the military, we're often preparing for, a certain something that we expect could happen. We're kind of practicing and training. And a lot of times, we think we're going, or maybe we think we're deploying to a certain place, and then world events or something change, and you end up last minute, you've spent the last 6 months training for one thing, and then they're like, "Oh, you're going to go over here instead," right? And so I think that ability to pivot or to transition quickly or to be flexible, whichever word or phrase or however you want to say that, but that's something that we have to do in the military, and I think that's something we have to do in real estate and stuff too. Whether that is as economy stuff changes and shifts with like strategy stuff, or with a particular property, if things something comes up that we weren't expecting. So I think there's a lot of translations there. One of the other things I think comes from the military and stuff a lot as well, and can be in other places also, but we are often asked to do more with less, or we're asked to do things, but not necessarily provided all of the resources that we need in order to accomplish that mission. And I think a lot of times in the military, we end up having this kind of like can-do attitude, almost like a MacGyver type of thing. Like we're gonna be able to fix stuff or do something or accomplish something. We'll find a way to do it. And I think that comes in real estate a lot of times too, where we kind of get, we hit some bumps in the road, or some things happen that we weren't expecting, but we find a way to overcome it.
A lot of our audience are composed of fulfilled professionals who are really quite satisfied and find a lot of fulfillment from the work of their calling, and they're not interested in really becoming real estate investors. But they certainly can benefit from investing in real estate. And of course, that is through limited partnerships or through passive real estate endeavors. So, can you talk to us about passive investing, what that is in real estate, and particularly how fulfilled professionals can enhance their financial well being through these various endeavors?
Yeah, absolutely. I think that, you make a good point there where sometimes people are, and in fact, in my case, also, I have a lot of friends that are still in the military. They're very busy, they're deployed or whatever, and so they don't necessarily have the time or desire to take the time to learn the ins and outs of real estate investing. But from a portfolio perspective or something, there are often things in real estate in general that are more beneficial, or there are more ways that you benefit from a real estate investment than perhaps some, investments that we are used to with stocks or bonds or whatever that might be. And so, some of those quickly, include, the ability to leverage, the bank's money, our traditional appreciation of real estate, or our ability to force appreciation through real estate if we have, value add opportunities, the equity that comes from principal pay down, cash flow, tax benefits through depreciation and other things. So real estate in general just provides a broad range of opportunities that can, we have different portfolios and different priorities. Like some people want equity growth, some people want cash flow, some people want tax benefits. And so this range of benefits, is a little bit broader than we sometimes find in, just kind of a Wall Street-esque opportunities. And so the cool part about real estate is, like, some people don't realize that you can invest passively, right? A lot of times people think like, hey, I have to own the single family property, or I have to be the landlord. And so there are a number of ways in real estate that you can get involved passively. One of them, you can be a private lender, for someone, flipping or, short-term type of money and stuff, which is passive and usually a little bit shorter term. Tax benefits and things like that don't necessarily go along with that. You don't necessarily always get the equity growth and necessarily some of those like real estate benefits, if you will. And so that's where some good opportunities, like whether you invest in, a syndication as a limited partner, or maybe like in a fund that is investing in similar type of thing, come in handy. And so, you as an investor, a passive investor in that sense, you don't have to necessarily learn all the ins and out or be day in and day out like operations. You want to know enough to make educated investments, but probably more importantly than analyzing a deal or a market is analyzing the team that you invest with, right? And having the trust so that when you invest with them, you trust them to carry out the day-to-day operations to execute that business plan with your investment. And I think that one of the things, sometimes we get asked these questions from passive investors, or like when they are considering passive investing, when they're analyzing the team. But one of the cool parts about investing in a syndication is, if it's my friends or connections of mine that are investing with me, like they pretty much have direct access, to the CEO or to the operators. Whereas where you're investing in, stock market or things like that, you don't have near as much control if, the owners change out or day-to-day operations or things like that.
Well, those are all are all good points. What are some suggestions that you might have for a person who has never invested in a real estate endeavor, and yet they would like to? What are some of the first steps that they should begin to take?
I think probably the first thing is like to get some education, and that can come in different forms, right? So some people might like to read a book, they might like to listen to a podcast, but what I would really encourage them to is to reach out and, like for your audience and people that know you, to reach out and have a conversation with you, right? Even if it's not something that they think they're going to do in the next 30, 100, 365 days, even if it's something they think like at some point in the next, year, 2 years, 5 years, whenever that might be, that they're interested in doing so, start now, right? To learn and understand. Number one, you can have a conversation about. I don't think a lot of us realize how many different strategies there are within real estate sometimes. So like if you're not in the real estate industry necessarily, and we just automatically think of a single family house being a landlord rental type of thing. There's a lot of different options, and some of those different options align better with different goals, right? And so, if someone reaches out and has a conversation with me and I can talk to them about what their financial and their family goals are, I can kind of help guide them to like which strategies might best align with what they're looking for. If it's cash flow they need, or if it's growth, or if it's tax benefits. So I can kind of share with them some different types of strategies that they may not be familiar with. And that way, when they go to read a book or listen to a podcast or something like that, they can kind of dial it in and focus that a little bit more on those ones that they specifically want to learn a little bit more about. But I think that don't delay and don't wait until they are, that they necessarily have the money or they are ready to invest the money. Start that education journey now, even if you don't have the money to invest, or if you have it, but you want to take your time and having conversations and getting educated. And that way, when the money is available or whatever, they are, from an educational perspective, ready to do so, ready to take action.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes.
Yeah, I mean, I think that's an excellent idea to start sooner rather than later in terms of your education and in terms of your learning. It's not something that you can just go out and jump into. I mean, in the stock market, you could absolutely know nothing about stocks, and you can go out and buy a stock tomorrow and sell it the next day. Real estate investment opportunities are just not like that. They just don't come along every day, and you need to be prepared and plan for when those opportunities are opened. There may be opportunities available out there every day, but like you had mentioned, you need to know who it is you're investing with. And just because there's an opportunity that is opened and available doesn't mean it's an opportunity that you should be investing in.
I think through those conversations too, that whole education piece, not just like learning about the strategy or strategies that might align with them. You kind of get to know, the team member or members better. And then also, like, you never know what else you might find out. Like, a lot of times people think like, oh, I don't have, 50,000 in my bank account to invest today. But sometimes when someone has reached out to like just have a conversation and start to learn, through our conversation, they found out that, oh, I can use, my IRA to invest, or, if it's appropriate, I could use a line of credit on my house or an investment house, or these different options of how they can invest. And so sometimes people might think like, oh, I don't have 50,000. It's going to be a couple of years before I can. And what they realize is like, oh, I do have an avenue that I can invest today. It's just not what I thought.
Right. Yeah. And you had mentioned utilizing a line of credit. You can do that. You can do that with stocks if you want to as well. I certainly would never recommend anybody take a line of credit out to invest in stocks, but some people do and do so successfully. But I'm not that familiar with the stock market. But I could very comfortably recommend that a person who has sufficient equity in their homes, I wouldn't recommend they take every bit of their equity out, but I could certainly see someone taking a line of credit where they're going to pay anywhere from 6 to 7.5% interest today on that. But in a real estate investment endeavor, the chances are really quite good that they're going to get returns of anywhere from 20 to 25 or so percent returns. And so it begins to make sense. But even though it may make sense to do that, like you are saying, you would not want to take a line of credit out and invest that with someone that you just happened to meet yesterday. You want to be sure that who you're taking that line of credit out to invest with is going to preserve that capital that you are investing with them. and that takes time to develop those relationships and those connections.
One
A
other
lot
point, if you
of
don't mind, Alan, on that, I just wanted
Go ahead.
to, just to clarify for someone listening too, and this is like the value of those conversations is specifically on the line of credit piece is to make sure, like, while the overall return of one of our syndications or something might be in the ballpark of 20%, like the cash flow each year may not be, right? It may be, equal to, slightly greater than, maybe even a little bit less than the interest that is due on the line of credit, right? And so that's a conversation I think it's important for us as like general partners and syndications and stuff to have with our limited partners to make sure like that our distributions aren't necessarily aligned with when their interest payments are due and stuff. And right. And so that's kind of to help that education to make sure that they're aware. And so some people, if they have, the great W-2 or whatever, and they can afford to pay that interest, or if they're in a good cash position, whereas others might prefer to have the cash from the investment, to pay that interest each year. And in the overall, the real estate investment should be plenty of return to be over their line of credit. But we want to make sure that they're aware of those types of things so that, when that line of credit comes due, they're not like, oh, where's my distribution? Because our distributions aren't necessarily aligned with that. So I don't get too far off track. I just want to, highlight that to make sure like those are the kinds of conversations that we as general partners should be having with our investors to make sure that they understand the situation and are comfortable with it before they make an investment.
Absolutely. A lot of professionals that I talk with are, I guess, financially comfortable, you would say. They generally have pretty decent salaries, and they have been in their field for anywhere from 10 plus years. And so they have oftentimes state-of-the-art retirement plans through their employer. And so they think, I'm taken care of, and I don't have to worry about retirement. I've got all of that taken care of. And while retirement plans with companies can be good, and they are good things to have, I know from my own personal experiences that there's a lot of shortfalls to those that they just never seem to share with us. One of those are that income is taxed. Not something most of us are looking forward to when we have a reduced income from retirement. On top of that, we're having to pay taxes. And oftentimes it just begins to fall short when we get to retirement and we realize we have the potential for another 20, 25, maybe even 30 years of life. And yet the people I talk to just aren't thinking about those and aren't considering those possibilities. And so they think, well, I don't need an alternative form of investment. So can you talk to that? I'm sure you run into those same situations when you're talking to potential investors.
Yeah, certainly. I mean, I think that, we all have a wide variety of, whether pension, retirement plans, different things, but we know, and I know even people within my own family and stuff that have worked for, what are good companies and have, good plans and stuff, and they invest as much as possible in that. But, we've seen with the Enrons and stuff, as an example, we never know, even if something is looking very, very solid and stuff today, what exactly is going to happen. So I think just like in the sense of, those of us that are active, whether you have a W-2 and stuff, if we can create more income streams and different types of income streams, we are more secure, right? Because even if we have a great W-2, that W-2 could be gone tomorrow. And so if you can create income streams from some different places, there's just like a little bit more security there. And so even in my own situation where I retired from the military, which is from I guess, security perspective, or the expectation that pension is going to be there is pretty solid. But they all have their own, as you said, kind of low points or failures, or, whether it's taxed or not as much as you expected it to be, or how much you can control it. I mean, with the self-direct IRAs or things of that nature, where you can, control that. So like later on, if your stuff's invested in stocks or in your company's plan or whatever that might be, sometimes those can be pretty variable, and if something happens at the wrong time as you get close to your retirement, then that could be pretty impactful. Where if you are able to control your investment a little bit more, and some things that like real estate that might be a little bit more stable or a little bit slower shifting and stuff, even if it's not all, even if you can have a portion of your retirement kind of diversified into that, I think there's a higher level of security there just to have those different options instead of all of it in one place.
Yeah, absolutely. Well, Marcus, tell us about long legacy capital and how that came to be, and why it is different from other real estate firms out there.
Yeah, so I think that I had years of experience kind of in single family rentals and stuff along those lines, and as I made the transition into multifamily a few years ago, I wanted there to be more behind it, than just another real estate company or another multifamily company. And so that kind of, the Along Legacy name, kind of both a twist on my last name, as well as, how I sought to live my life and the example that I provided for my children and stuff, right? So it was more than just the financial legacy aspect of it, or the financial security through our investments, but also the way I tried to operate business, to be a father, to be a husband. And that way, as I come to work at Along Legacy every day, I keep that into mind. And I think, why are we different? How are we different? I think a couple of things that come to my mind pretty quick is on the resident side and things like that, like at the actual property. We really work hard to be a family with like our property manager. Obviously, they work for us and to execute our vision and our business plan, but we really see them as family and try to take care of them, as well as the residents that are there. We want to do more than just put a roof over their head. We try to host like resident events and door decorating contests, and really have fall festivals and back to school nights, and build a community. Right? It's not just a real estate property, but we're really trying to build a community there. On the other side of that, with our investors, I have a lot of educators in my family, and while I never did that professionally, I think a lot of that like shines through in my desire to, and the enjoyment that I get from spending time and educating my investors. So sometimes people just don't necessarily want to talk to their investors. They want everything as a little bit of time as possible, email, phone, a text message, whatever, all that kind of stuff. I really do enjoy getting on a phone call, as we talked about before, and going on a journey, with my investors. And sometimes that journey doesn't necessarily start with me, or maybe my investments aren't right for them on this point of their journey, right? So, maybe there's some other ones that are better for them, that are more liquid at this point in time, that I can guide them and help them on. And when the time is right, they may come back to our investments. But I enjoy spending that time with the investors to educate them, building a relationship with them, so that when they invest, they have that comfort and that trust and stuff with us. I think those are a couple ways, that make us different than just the average company.
And you can find the contact information for Along Legacy Capital in the show notes, but that their website is alonglegacy.com, and you can connect with Marcus through that. Before we go here, Marcus, let's go with one last question, and that is, would you share with us one of your most difficult setbacks in life, and how did you come through that, and what was the lesson learned from that?
So I think that I don't know if this is most difficult setback in life necessarily, but with my real estate mind or headset on here, a few years back when we were doing single family stuff, I was kind of partnering with some of my brothers. We were geographically separated in many places. We had started to invest in single family, saying that we were going to do it for the passive income, and we were kind of doing it in a rural area where we grew up. And ultimately, we bought quite a few single family houses pretty quickly. Some of them were okay investments. Some of them didn't need a lot of work. But ultimately, many of them were in different stages. Some of them were probably more of like a flip than, close to being a rental. Some of them ended up being, we had to gut and different things like that. And it was pretty challenging. We invested there because we had the team of like bank and insurance and things of that nature. But as I mentioned, there wasn't professional property management. There's very, very limited contractors. And ultimately, we realized, this was not passive investing at all. Like we were very hands-on. We were trying to manage from afar. We hadn't necessarily lined up contractors properly to do the required work that we needed to do, which made, we had longer hold periods, which cost us more money. And there was a lot of challenges there, right? And so I think that ultimately we got most of those stabilized eventually and have offloaded most of them now because we looked at each other and like I said, like, hey, this isn't passive. And as I moved into multifamily and did the syndications, I was able to provide, those brothers and stuff a different passive opportunity. It was a lot less of a headache. And so I think that there were a lot of challenges that took a few years to to offload those once we realized what we were gotten into. But there are definitely a couple lessons learned there as far as, understanding, like getting good at one strategy or one thing before we try to take on another shiny object or try to do too many different things that we weren't prepared to do. I think another lesson is to ensure strategies align with your goals, right? There's like I said, a lot of different strategies or opportunities, but to make sure that they align with what you are trying to achieve and not just do them because someone else is doing them. So while not necessarily a significant financial setback, it did have financial opportunity costs and certainly a lot of mental or headspace opportunity costs for a few years.
Yeah. That's interesting that you're saying that the strategies that we get involved with need to align with our goals, and our values and our long-term visions. I think it's really challenging a lot of times though to really know where a strategy is going to take us until we actually get into those. And I think that just takes us back to what we were talking about earlier is, start these relationships early and know the people that you're involved with, because the team that you're investing with, they should know their strategies and be familiar with them and not just taking on a new strategy here and a new strategy there, because you never know where those are going to go. So, Marcus, thank you so much. It's been a delight having you. Always a pleasure visiting with you. So thanks for being with us. And enlightened investors, thank you once again for being with us. Please take a moment to like, share, and subscribe, and head over to Apple Podcasts and leave us a rating and a review. Until next time, live abundantly, and we'll see you in the next episode.
Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.